It's been a volatile week for the electric vehicle stock NIO. You can see the move on the daily chart here. So what has inspired this volatility for the stock price? And actually, is the way the market reacted something of a buy signal? We've looked at NIO before, and we've recently had some disappointing news on deliveries. More about that in a second. But you can see the volatility for the stock price on the 1st of November, trades as high as $41.30, trades down below 37. So we saw a 10% swing in very short order for the stock. But does it actually change anything? So as usual in this video, I'll talk about what this recent news was, why it was on the face of it bad. Then we'll come back, look at things in a bit more detail and examine why actually it might end up being something of a buying opportunity. Hello, I'm David Jones from Capital.com, and I thought this time around we'd do an update on NIO. It's been a big week over the last week for electric vehicle companies. We had Tesla becoming $1 trillion company. Lucid shares jumped really sharply. Of course, it's the COP26 climate conference, so I thought it's timely to look at NIO. Plus, in light of their latest delivery news, what does this mean for the stock price? So as usual, I'll go through some of the recent news about NIO. We'll look at the levels to watch, then we'll jump back onto the platform and take a look at the charts in a bit more detail. Because even though this latest news on the face of it looks bad, I don't think we're seeing that translating into the stock price. But more of that in a second. Before we get into it, if you haven't subscribed, if you could click on subscribe, it does help support the channel and it means we can continue to push out lots of different content on the various stocks that we look at throughout the week. Okay, let's take a look at NIO in a bit more detail. So in case you're not familiar with what NIO is, it's a Chinese multinational electric vehicle company that was founded back in 2014 and slightly different to a lot of the other EV companies where you have to plug into a charger, charge it up. With Tesla, you have superchargers across the globe. With NIO, they built a network of battery swapping stations across China. So if your charge is getting low, you drive in and then it's automated. Your flat battery gets swapped out and a fully charged fresh battery gets inserted. So doing it slightly differently to everyone else. But where we've seen some, what would say is some bad news this week, some disappointing news, is on the number of vehicle deliveries in October. So the company in October delivered 3,667 vehicles during the month, which is down 65% from the previous month. So, that's a massive hit for sales. It is just 1 month, but the company said there are a few factors for this. It's been upgrading its manufacturing line. So there's been a delay while those upgrades have been going through. There's supply chain issues. We know, for example, about the global chip shortage that's affecting almost all car makers around the world. But a fair bit of volatility, not surprising for the stock as this news came out. In addition, over the last week, the respected Wall Street analyst firm Bernstein has started covering the stock. And again, perhaps this was a bit of a disappointment to its rival, XPeng, the other electric vehicle company that we look at fairly regularly. It's given it a market outperform rating, but for NIO, it's only said market perform. So not as bullish on NIO as it is on XPeng, and it's given the stock a target price of $45. The stock at the time of recording is trading just below 40. So as I said, we had some volatility for the stock price over the news, but not a massive sell-off. We'll take a look at it in a second. The share price for the year so far is down about 18% year to date. So it has been a disappointing year. But given the fact it's managed to shrug off this bad news about sales in October or deliveries in October, is the stock a buy? Let's take a look at some of the levels to watch, then we'll jump back onto the platform. So for me, the most immediate hurdle on the upside is the highs hit in October, late October, coming in around $42.30 a share. I think if we break through there, we can start targeting the highs from the summer. On the downside, I think an interesting level to watch is where it traded to as this news came out. It traded down to $36.80. We did see the stock bounce back. So this could be an interesting short-term line in the sand anyway for NIO. But to put some color on these numbers, let's take a look at the charts. So let's take a look at the last 12 months or so for NIO first of all. So it's been a pretty volatile year. The stock did trade as high as about $66 in January, and then more than halved into May, slipping down near $30. It's been, I suppose, broadly sideways since then. I think, first of all, what's interesting for me is that this whole $32 a stock area has proved to be something of a floor since March of this year. We've seen weakness on a few occasions down to here, and we've seen the buyers come back in, but perhaps more of that in a second. Let's take a look at the moving average first of all. As usual, I've got a 20-day moving average on the chart. We get a buy signal when the price moves above the moving average, like here in May, and a sell signal like here in July when the price falls below the moving average. The latest signal we had was a buy signal. So we go back to the middle of October as the stock price moved through about $35 where the moving average was at the time. We had a buy signal off the moving average. And at the moment, despite the volatility over the last 24 hours, the moving average is still long. So bullish from a moving average point of view. We've got, looking at the RSI down here. So RSI is an overbought, oversold indicator. And it had hit an extreme since the middle of October, suggesting that perhaps the stock has gone far enough for now. As I often say, in strong trending markets, RSIs can give us signals a bit too early. But at the moment, it's suggesting that the highs we saw in the middle of October was something of an extreme. The RSI has fallen back a bit from that extreme reading. But for me, what is perhaps of more interest is what's going on with the chart. First of all, it has been broadly sideways since March of this year, but we did have this correction from July through to beginning of October. So 3 months this correction lasted. And the strength that we saw through that moving average also took out the trend line, the downtrend line. So that could be a suggestion that perhaps that correction is over and we should, from a chart point of view, perhaps be a bit more bullish on the stock, looking for a run back up to reclaim some of these old highs from the summer. What's interesting for me is what happened when that news came out. Let's just change this to a short-term chart again. So loads of volatility for the stock when the company reported that delivery news, how much they were down in October versus September. But I think what's interesting, if we look where it was trading before the news came out, around $39 for the stock, loads of volatility, but we're back up and slightly higher than where it was trading before. So it doesn't seem that the market views it as that big of a deal, that 1 month drastic drop in delivery. So that's why I think these old lows below $37 could be interesting ones to watch in the short term, because the market's already moved away from them. So for me, given the fact that the moving average has given a buy signal, it looks like perhaps we're out of that correction from July. We've seen some volatility, but not a negative reaction to that latest news. It does feel as if the sentiment for NIO, I think, is still positive. So in the short term, I think some levels to watch as potential targets if we were looking at the charts, run back up to the old highs at 42.27 or thereabouts from late October. If we can break through there, then I think we start looking at this whole 45 to 47.50 area. So no major trend really for NIO at the moment, but over the last month, it has come back to the bottom of that range that's been in place since March. And I do wonder if perhaps we'll see a few more gains from here, but a really interesting one to watch over the next days and weeks ahead. That's it for this update in NIO. I have to say, I don't think the market reaction is actually that bad. So I think it's a really interesting one to watch from here to see if after it's shrugged off these numbers, can it stage some sort of recovery? We'll come back to it in the weeks ahead, take another look at it. But for now, from me, David Jones and Capital.com, we'll leave things there. Good luck with your investing. For more trading videos just like this, please subscribe to our channel.